Hi there, Shingirai here again with another update on portfolio performance over the past week. In a somewhat euphoric week, we saw 9 out of 10 of the CBAM portfolios outperform their respective benchmarks, with returns ranging from CBAM 1v2 returning 0.44% up to CBAM 5 returning 1.11%. After a flurry of Fed and central bank, global developed central bank rather, making the decision to pause interest rate hikes at their last monetary policy committee meetings. This gave the market some euphoria and expectations for yields to begin to come down and interest rate cuts as early as 2024, leaving both the bond and equity markets positive. In terms of top performers in the portfolio, Hypnosis Songs Trust returned 3.55%, alongside Allianz Continental European returning 3.08%, and the S&P 500 invariably also up 2.66% in the relatively risk-on week that we had last week. And also we did see some positive news coming this week as well in terms of more data points to support the performance of equity markets, with inflation readings across the UK and the United States coming in lower than expectation, really giving the market some optimism here that the interest rate, the inflationary story is beginning to dissipate somewhat, and moving expectations in terms of interest rate cuts from major central banks, and really that driving the markets in terms of performance on the 1 week basis. Switching over to detractors from performance, despite some positive news we're getting from geopolitical fronts in terms of China and USA, with President Xi Jinping and President Joe Biden meeting recently and having bilateral talks in San Francisco, we do continue to have that headache of the property market in China, which has had some woes that we've been highlighting throughout the year, and that would see all three of our Chinese positions retreating about more than 1.58% on the 1 week basis, despite some also positive news in terms of industrial production supporting, surprising on the upside, but fixed asset investment has been negative as well, whilst unemployment stayed stable at 5%. In terms of quarter-to-date performance, 1 out of 10 of the CBAM portfolios outperformed respective benchmarks, with returns ranging from CBAM 1v2 returning 0.95% and CBAM 3 and 4 respectively returning negative 0.21%. We continue to see that strong performance there from the US equity markets, with both our hedged and unhedged positions appearing in the top 3 performers, up more than 2%, and also some recovery there in terms of European government bonds after the ECB took a pivot after 10 consecutive interest rate hikes and opting to pause at their last monetary policy committee meeting. In terms of detractors from performance, we do continue to see those headwinds there for the Hypnosis Songs Trust, down 8.98%, but we continue to be optimistic looking forward to the 26th of April 2024, where the board of directors, newly instated board of directors, will be expected to present on its strategic review, with plans in terms of if the Songs Trust will be going under a fire source sort of scenario and just going out to the market with that catalogue of music, or there would be some sort of plan for continuation of the investment trust, which would effectively allow for safeguarding of that discount to net asset value that we saw in terms of the share price of the fund. As I highlighted earlier, we continue to see headwinds there for our Chinese equity positions, down more than 3.6%, and really here markets waiting for some sort of stimulus in terms of Beijing really trying to support the property markets and also the broader financial markets as well. Looking forward, we look forward to the UK retail sales data towards the end of the week, which is expected to be softer in line with US retail sales data, which is also negative but greater than previous readings as well. We look forward to European CPI, which we very much expect also to indicate inflation coming off somewhat, much in line as the readings we got this week from the UK and the United States. And then also we'll see US housing starts data indicating the strength of that property market there as well.